I was 9 years old when I got my first taste of real money. It wasn't just a few coins handed to me by my parents or a birthday gift from a relative. This was money I had earned through my own efforts, and it felt different. It felt empowering. Not allowance, not birthday money, but money earned from a business I started. I remember the excitement of setting up my lemonade stand, the anticipation of my first customer, and the thrill of watching the coins and bills accumulate in my jar. It was a small lemonade stand, strategically placed on a busy street corner. I chose that spot because I knew it had a lot of foot traffic, and I wanted to maximize my sales. I spent hours perfecting my lemonade recipe, making sure it was just the right balance of sweet and tart. The feeling of making my own money was exhilarating. Each time a customer handed me money, I felt a rush of pride and accomplishment. It was a validation of my hard work and entrepreneurial spirit. It sparked a fire in me, a desire to create wealth and achieve financial freedom. I began to dream bigger, imagining all the possibilities that money could bring. I wanted to buy things, of course, but more than that, I wanted the freedom to make my own choices and the opportunity to pursue my passions. I realized early on that money was a powerful tool. It wasn't just about buying toys or treats, it was about creating opportunities and securing a future. I started to see money as a means to an end, a way to achieve my goals and dreams. It could buy things, yes, but more importantly, it could buy freedom and opportunity. The freedom to choose my own path, to take risks, and to invest in my future. I began to understand that money could be a catalyst for change, a way to make a difference in my life and the lives of others. This realization fueled my hunger to learn more about money and how to make it work for me. I started reading books about finance and entrepreneurship, eager to soak up as much knowledge as I could. I wanted to understand the principles of wealth creation and how to apply them in my own life. I devoured books about entrepreneurship and business, eager to unlock the secrets of wealth creation. I read about successful entrepreneurs and their journeys, learning from their successes and failures. I was fascinated by the idea of building something from scratch and turning it into a thriving business. One day, my dad, a firm believer in financial education, introduced me to the world of investing. He believed that understanding how to invest money was just as important as earning it. He wanted me to learn how to make my money work for me, rather than just working for money. He explained how money could work for you, even while you sleep, through the magic of compound interest. He showed me charts and graphs, illustrating how small investments could grow over time. It was like a light bulb went off in my head. I realized that investing was a way to multiply my money and achieve financial independence. Intrigued, I delved headfirst into the world of stocks and investments, eager to learn the ropes. I spent hours researching different companies, studying their financial statements, and analyzing market trends. I wanted to understand how the stock market worked and how I could make informed investment decisions. This was the beginning of my journey to building a $100,000 stock portfolio by the age of 13. It wasn't an easy journey, and I made plenty of mistakes along the way, but each mistake was a learning opportunity, and each success fueled my determination to keep going. It wasn't always easy, but it was always exciting. The ups and downs of the stock market taught me valuable lessons about risk, patience, and perseverance. And as I watched my portfolio grow, I felt a sense of accomplishment and pride. I knew that I was on the path to financial freedom, and that was the most exciting feeling of all. At first, the world of investing seemed like a foreign language. The jargon, the numbers, the endless charts, it was overwhelming. I remember sitting at my desk staring at stock charts on my laptop, feeling utterly lost. The financial newspapers in different languages only added to my confusion. It felt like I was trying to decode an ancient script. Stocks, bonds, dividends, it was a lot to take in. Each term seemed to open up a new world of complexity. I found myself surrounded by stacks of books, each one promising to unlock the secrets of the market. I started writing down financial terms in a notebook, hoping that repetition would help me remember and understand them, but I was determined to crack the code. I knew that understanding these concepts was the key to unlocking a world of opportunities. I spent hours studying my computer screen, analyzing stock charts with a magnifying glass, and taking meticulous notes from investment books. My determination grew stronger with each passing day. I started with the basics, learning about different asset classes, market dynamics, and investment strategies. I read everything I could get my hands on, from beginner guides to advanced financial theories. My computer screen was always filled with tabs open to various financial articles, and I watched countless online tutorials about asset classes and market dynamics. My dad became my first mentor, patiently explaining the fundamentals of investing. He would sit with me for hours, discussing stock charts on the laptop and pointing out key financial data on pieces of paper. We read investment books together, and he always made sure to break down complex concepts into simpler terms that I could understand. He taught me the importance of research, risk management, and long-term thinking. He emphasized that investing wasn't about making quick money, but about making informed decisions and being patient. I learned to highlight key points in investment books and take detailed notes during our discussions. He stressed the importance of investing in what you understand and believing in the power of compound growth. We often used a compound interest calculator to visualize how small, consistent investments could grow over time. This concept fascinated me and made me realize the potential of long-term investing. I spent hours poring over financial websites, reading investment books, and watching stock market news. I wanted to stay updated with the latest trends and understand how global events impacted the market. My curiosity drove me to explore various sources of information, from online articles to TV segments. I learned about different investment styles, from value investing to growth investing, and everything in between. Each style had its own set of principles and strategies, and I was eager to understand them all. I read books dedicated to each style and took notes on their unique approaches. I was like a sponge, absorbing as much information as I could. Every new piece of knowledge felt like a step closer to mastering the language of investing. I watched online investment courses, read extensively, and wrote down notes to reinforce my learning. The more I learned, the more fascinated I became. Discussing investment concepts with my mentor was exhilarating. I found joy in reading financial articles and analyzing stock charts. The world of investing started to make sense, and I felt a growing sense of confidence. The stock market wasn't just about numbers and charts. It was a reflection of the real world, a gauge of innovation, consumer behavior, and global trends. I realized that understanding the market meant understanding the world around me. It was a dynamic and ever-evolving landscape that mirrored the complexities of life itself. As I explored different investment strategies, I was particularly drawn to value investing. It seemed to offer a more grounded and thoughtful approach compared to the high-risk, high-reward strategies that often dominate the headlines. Pioneered by legendary investors like Benjamin Graham and Warren Buffett, value investing focuses on identifying undervalued companies with strong fundamentals. These investors have demonstrated that by carefully analyzing a company's financial health and market position, one can uncover hidden gems in the stock market. The premise of value investing resonated with me. It was a strategy that required diligence and a deep understanding of the businesses I was investing in. It wasn't just about numbers, it was about the story behind those numbers. It wasn't about chasing the latest hot stock or timing the market. It was about understanding the intrinsic value of a business and investing for the long term. This approach meant looking beyond the market's short-term fluctuations and focusing on the underlying value of a company. It was about being patient, disciplined, and buying assets for less than they were worth. This required a mindset shift from the typical investor's focus on quick gains to a more measured and thoughtful approach. I started researching companies, analyzing their financial statements, and understanding their competitive advantages. This involved looking at various financial metrics such as earnings, revenue growth, and return on equity. I looked for companies with a strong track record of profitability, low debt, and a history of paying dividends. These factors indicated a company's financial stability and its ability to generate consistent returns for its shareholders. I wanted to invest in businesses that I understood and believed in, companies that were built to last. This meant diving deep into their business models, understanding their products and services, and assessing their long-term growth potential. This approach required patience and discipline, but I was confident that by focusing on value, I could build a portfolio that would stand the test of time. It was about making informed decisions based on thorough research and a clear understanding of the market. Over time, I learned that value investing wasn't just a strategy, it was a philosophy that emphasized the importance of investing in quality businesses at reasonable prices. By adhering to these principles, I aim to achieve sustainable and long-term financial success. My journey to building a $100,000 portfolio wasn't a solo mission. I had the support of invaluable resources and mentors who guided me along the way. Books, in particular, became my secret weapons. The Intelligent Investor by Benjamin Graham became my investment Bible. It provided me with a framework for understanding financial statements, evaluating businesses, and navigating the ups and downs of the market. I also devoured books by Warren Buffett, Peter Lynch, and other investing greats, learning from their experiences and insights. Beyond books, I was fortunate to have mentors who shared my passion for investing. My dad, of course, was my first and most influential mentor. He patiently answered my questions, shared his knowledge, and encouraged me to think for myself. I also sought out other mentors, connecting with experienced investors online and attending investment conferences. These mentors provided invaluable guidance, sharing their insights and helping me avoid costly mistakes.